The crypto bull run is upon us, and nobody, it seems, is pricing in the news that will cause this next wave up, this pump. Right now, as the market sleeps, governments, billion-dollar treasuries, and regulators are lighting the fuse for the biggest run of the decade. It's a new era where the price charts look boring, I know, but the numbers fundamentally driving the price action we see is screaming opportunity to us. Today, I'll break down exactly why crypto is about to pump, why it's about to explode, and how you can spot these under the radar signals before anyone else. So if this sounds good to you, let's get started. Okay, so for the first time in years, government policy, big money, and technology upgrades are all aligning in the same direction. Hidden in plain sight, new laws are opening doors that most people are just not keeping up, which is not you because you're here. But institutions we know are quietly buying as much as possible. If you missed my video from yesterday and the day before, I'd encourage you to go watch them because I lay it all out. Anyway, the point is right now, entire sectors of crypto are getting unlocked almost overnight. All while the charts are noisy and the blueprint for the next bull run is being drawn behind closed doors. And it's being done so by lawmakers, treasury managers, and by the world's largest asset managers. The moment is about seeing what everyone else will only understand in retrospective when it's too late. And the whole strategy is to use this information to leverage it, to get into position while it's still time, while we're early, and while the rest of the market is distracted. So let's talk about how the rules have changed, because the biggest catalyst in the market isn't a new coin right now or a tech upgrade. It's regulation. It began with the White House releasing a landmark crypto report, an official playbook, so to speak, on how the United States will be approaching and treating digital assets moving forward. So this wasn't just another policy memo. It literally lays out the framework and called for clear rules on everything from custody to stablecoins, and put crypto innovation squarely on the agenda for lawmakers, regulators, and banks alike. Only days later, the SEC unleashed Project Crypto, the most aggressive digital asset plan basically in the whole US history. SEC Chairman Paul Atkins delivered a vision for what goes beyond routine regulation. He mapped out a 5-year plan to bring America's financial markets all on chain, moving everything from stocks to the US dollar onto public blockchains like Ethereum. It's a roadmap that kicks open the doors for trillions of dollars in capital to move seamlessly into crypto. So regulatory momentum continues to build. As an executive order is in the works, I covered this in yesterday's video, to stop banks from cutting off crypto companies, clearing the runway for broader industry access. And the CFTC announced a major step allowing spot trading of digital assets on registered futures exchanges, something industry insiders have been pushing for years. And then, of course, we had the final breakthrough. The SEC's Division of Corporation Finance issued official guidance that liquid staking protocols, when structured properly with simple one-to-one receipt tokens and without managerial control, fall outside of the securities laws. So of course, this could unlock huge growth for the entire liquid staking sector, giving them finally the green light to expand in the US markets at scale. So in a single week, guys, we've seen regulatory fog finally give way to clarity, rules on the table, incentives aligned, and the next wave of crypto adoption is set into motion. These legal breakthroughs are already unlocking new sectors and turbocharging money flows right as the market is least prepared. So I hope you see the opportunity I'm trying to explain to you. The fact that all of these elements are coming into alignment and into place. Sure, I'm connecting the dots for you, but it's really easy, I think, to see the writing on the wall and how The parabolic phase of the bull run is literally here and upon us if we pay attention, which means we need to get into position now so that we can ride the wave up. But now let's talk about staking, yield, and DeFi unlocked. Because with the SEC green-lighting liquid staking, Ethereum just got its biggest US regulatory unlock ever. Now, asset managers can build ETFs that actually pay staking yield, something they've been lobbying for since day one. So we see liquid staking protocols like Lido, Rocket Pool, and Jito Labs have over 67 billion in total value locked in TVL, and 51 billion of that is on Ethereum alone. So this unlock means institutional players can finally participate in yield directly, rather than simply sitting on the sidelines watching retail capture all the rewards. For the first time, institutional asset managers can build spot ETH ETFs that actually deliver staking yield, something traditional finance has been chasing for years, and something every pension fund and endowment now wants a piece of course. So this move doesn't just mean more products. It means more capital pouring into the core of DeFi. It means on-chain yield is now becoming the centerpiece of the new financial system. No more tiptoeing around the SEC. No more slow walking ETF applications or hedge funds pretending staking doesn't exist. Suddenly, all the capital on the sideline is watching DeFi as the new Wall Street trading desk. Only this time, it runs 24/7 and it's permissionless and pays real yield every single day. And here's where the story picks up speed. With regulation now as a tailwind, the capital that once trickled into DeFi is about to become a flood. So now let's shift gears a little bit and let's look at what's happening on the institutional level and with treasuries. While most investors have been watching prices dip and have been worried about ETF outflows or value leaving the ETFs, the biggest investors, the biggest players have been quietly loading up. In July alone, institutions and companies have added over 107,000 Bitcoin to their holdings. Public companies now control 955,000, and the combined institutional, corporate, and government stack is up to 3.64 million Bitcoin, worth over, just take a pause and listen to this, $428 billion. That's a 10% increase in institutional holdings in just 1 month. Ethereum is showing similar conviction too. As of this week, for instance, over 30 billion in ETF sits in treasuries, corporate wallets, or ETFs. Almost 7% of supply is already locked up in long-term hands, long-term wallets by believers. Solana isn't being left behind either. UpXi Treasury, trading as UpXi, holds the largest SOL treasury among all public companies, clocking in at $340 million, with its stock trading at the lowest premium in the sector. So even though crypto ETFs have logged their first net outflows in 15 weeks, the real money, okay, the smart money, didn't leave the ecosystem. It rotated, it pivoted, that's all, flowing out of Bitcoin and straight into Ether with other next-gen assets, following a pattern that has always marked the early innings, the early signs of a new bull run. This is what always happens. And what most traders, what most new investors miss is the speed and the momentum of it all. You have to be patient and you have to know what you're looking at, because these moves don't happen during hype. They happen during times of uncertainty and distraction. While retail, which means just like the 99% of all investors out there, are chasing green candles, they buy at the wrong time, they buy when things pump. The whales, or smart money, really rich smart money, they stack in silence. They buy no matter what. And they definitely buy when the market's on sale, when it's in a correction or in a dip. And actually every dip just cements their position and dominance, because they understand the market cycle. And if you're new, don't worry. This is why I bring you these videos, because I'm trying to share my experience and what I've learned from having gone through a cycle. And that's why I'm bringing it to you. So you don't have to go through this bull run and miss out on these investment opportunities. And so you can put yourself in position now and ride the wave. Anyway, so right now we see it's not just companies and funds piling in, okay, and accumulating. There's also a new class of buyer on the hunt. We're talking about entire governments, countries making their move. And this changes the dynamic of this game, right? This financial investment game or strategy in crypto. It changes it for everyone involved. So let's zoom in on this. We know that governments are stepping in at record pace. Brazil's parliament, for instance, just debated whether to allocate 5% of the nation's $300 billion in reserves, which would be basically 15 billion, directly into Bitcoin. This kind of a move would instantly rank Brazil among the largest sovereign holders of Bitcoin on the planet. And over in Indonesia, the vice president's office is publicly considering adding Bitcoin to the country's national reserves, a historic first for Southeast Asia. And Kazakhstan is building its own strategic reserve as well, using coins seized by the government to get a head start, as the US is doing as well, for instance. And back in May, Pakistan officially announced plans for a Bitcoin strategic reserve as well. And just last week, regulators gave the green light for banks to buy and sell Bitcoin to accelerate adoption worldwide. So it's not just the usual suspects either. The global leaderboard for government Bitcoin holdings is shifting. The United States now leads, followed by China, the United Kingdom, Ukraine, Bhutan, and El Salvador. New nations are joining this race almost every single month, guys, each stacking Bitcoin ahead of a global supply squeeze. They're setting it up for us. Soon, there will not be enough Bitcoin to buy on any exchange, and it's going to be a money grab. People are going to be selling their Bitcoin for an extraordinary amount, and all sorts of protocols are going to spin up, like strategy, like Michael Saylor's company, leveraging it for loans. It's going to be wild what we're about to see happen. And what most people do not realize is that this is no longer a theoretical game theory. It's happening right now. The headlines that only make sense in retrospective. So I hope that's not you. I hope you're not sending me a message or a comment in the next year telling me, whatever, that you missed out on this opportunity to buy Bitcoin or buy into top blue chip tokens like Ethereum and Solana, for instance, or Sui. But I hope that's not you. I hope if you're here, you listen. I mean, I'm not making anything off of what I'm sharing with you. This is purely educational because I'm trying to help you. I'll soon be translating my content into Spanish and then into French and Portuguese because I feel the world really needs to hear all of this. I don't want people to get left behind, Anyway, the playbook is changing. Bitcoin and crypto are being treated as core assets in the world's most important portfolios. It's moving from being considered a risk asset to a core asset. So now, with governments rushing in, the next question is, how much supply is even left? The answer lies on chain, and the numbers are shocking. On-chain data reveals that the float, or the actual supply available for trading has never been thinner. Long-term holders control nearly 85% of all Bitcoin, levels that rival any historical peak for diamond hands. This is the clearest signal that conviction is winning, and the weak hands have already been shaken out. Exchanges are being drained week after week. Net outflows continue with fewer coins left for spot buyers to buy on the exchange, or institutions or even market makers looking to trade. Each drop in available supply cranks up pressure. So whenever we see fresh demand showing up, price moves become more explosive. The share of Bitcoin held by long-term wallets only dipped slightly during the last pullback, but the float or available supply remained near all-time lows. So this creates a power kick. Any spark from a new buyer can send prices flying, but the same thin liquidity can also amplify short-term volatility. But the key here is short-term, and it's not just Bitcoin. Ethereum and Solana are showing the same trend, with Treasury, ETF, and DeFi protocol wallets steadily locking away more coins. Stablecoins, meanwhile, are powering transactions at a pace that leaves legacy finance in the dust. Last year alone, stablecoin transfer volume surpassed the combined totals for Visa and MasterCard, two financial giants. which is proof that on-chain finance is now running at a real-world scale. This is where things go from interesting to urgent, with supply drying up and demand coming from every direction. Institutions, treasuries, governments. The only thing left that can truly shake up this market is a macro trigger. And that's exactly what's brewing right now. Goldman Sachs just announced that they expect the Federal Open Market Committee to deliver 3 consecutive rate cuts starting in September. Fresh inflation data is giving this thesis even more power too. According to Trueflation, US inflation has cooled to just 1.74%, bringing real interest rates into positive territory and turning up the pressure on the Fed to pivot sooner rather than later. Meanwhile, a massive downside revision to jobs growth, one of the biggest in 57 years, shows the labor market is far weaker than expected, reinforcing the odds of looser policy ahead. And all of this matters because crypto is the ultimate global risk asset, still considered that. So when real yields rise and the economy slows down, capital, all these investors, they start looking for harder money, more upside, and less government interference to keep their money working. So it's no coincidence that while the headlines, are focusing on price dips, long-term holders and governments and institutions are refusing to sell, and institutional wallets keep stacking. Sentiment indicators also tell us the same story. The Fear and Greed Index, for instance, which tracks crowd psychology, is back in neutral levels around 50. And we're looking for it to retest 40 or below, because in every past bull cycle, these levels have marked the moments when smart money starts moving and creating a bottom, while the rest of the market just sits by paralyzed and just completely uncertain on what to do. So with the macro winds shifting and the on-chain float running dry and new capital preparing to pour in, one more question jumps out. And that is, where will the most explosive moves show first? This is what we all want to know, right? What tokens are going to pump? And the answer is starting to appear in the altcoins and DeFi sectors. So you might ask, why are they showing up in these sectors? Well, with the news cycle focused on Bitcoin and Ethereum, many forget how explosive altcoins can get when the regulatory and liquidity picture flips. Right now, the SEC's new guidance on liquid staking we were just talking about and the flood of new capital into institutional products are laying the groundwork for the next altcoin rotation. Assets like Solana are now being stockpiled by public companies and treasuries, and DeFi protocols are shattering records for total value locked. And ETH ETFs are closer than ever to including staking yield as a core feature. So as mainstream finance plugs directly into staking, DeFi, and real-world blockchain usage, the altcoin sector is prime. It's set up for a supply and demand shock that the market hasn't begun to price in yet. So it's coming. Each new regulatory unlock, corporate treasury announcement, or sovereign nation accumulation headline adds fuel to this fire. So the key opportunity here is to not miss the opportunity. It's to not watch from the sidelines. It's to feel this sense of urgency, to understand that the time is now, the time has arrived, and to position yourself early while the signals are still being ignored by virtually everyone. The first step is to focus on your foundation. Bitcoin and Ethereum remain the core holding, with long-term conviction, staking, and yield strategies now available to even the biggest institutions. Solana and other top layer 1 coins, especially those showing treasury demand and robust on-chain activity, deserve a serious look. All this regulatory clarity is turning DeFi and the DeFi sector from this gray area into a core feature of mainstream finance. So it's time to explore yield and staking opportunities. DeFi blue chips like Aave, for instance, and Arrow offer massive upside given the new growth they've just unlocked. I'll be doing a deep dive on these soon. Let me know if you're excited. And it's important to stay sharp, to stay switched on by tracking on-chain indicators. I actually did a whole video on specific signals and indicators that tell you what's happening in the market. You can find it here. And we also need to be watching exchange outflows, rising long-term holding rates, and spikes in total TVL, total value locked on the biggest DeFi platforms. And keep an eye open, be tracking ETF flows and every headline about a new company or a new nation buying Bitcoin or adopting their Bitcoin strategic reserve. These are the signals that tell you and I where the next big move will land. And if you don't have time to be tracking all of these different little metrics, that's why I'm here. Feel free to subscribe and turn on your notification bell so that you know when I drop a new video and you can listen to it on the way home from work or on your way to work or whatever it is, because that's what I'll be tracking here for you. And just remember, history doesn't reward those who react. It rewards those who anticipate the data, the regulation, and the flows. They're all pointing to a window of opportunity that rarely opens this wide. You now have the tools, the information, and the blueprint. Get ready to act, because the next cycle will not hand out second chances. The time to position yourself is now. And to wrap up today's video, just remember that what sets apart legends, okay, who makes life-changing money this bull run, is timing and preparation. And now you have both. You're here just in time and you have all the data and information I'm bringing you. So if you found this video valuable or it helped you in some way, I just ask you like the video, share it with a family member or friend, and of course, subscribe if you haven't already. I have to keep asking because otherwise you'll forget. I love you guys so much, and I'll catch you guys in my next video tomorrow.